Hello traders, Gary Wagner here, approximately 10:45 in Honolulu, making it 4:45 in New York. It is Thursday, the 11th day of October, 2012, and this is the daily report for gold and silver. Finally ending a succession of lower days in gold. We do have the precious metals markets higher nominally, but higher nonetheless. Currently, you can see gold is trading up about $4 or $5 on the day, 1767.16. It has had a high of 1776 and a low of 1762. Silver also has a nice showing on the day, although it is well off of the lows. And as you can see from our 60-minute chart I've just put up, we are currently about 2 to 4 cents higher on the day, 33.98. It has had a low of 33.88 and a high of 34.44 on the day. You know, traders, if we're not about to enter some sort of a retracement or correction, what I'll call an intermediate wave 2, we are sure seeing the majority of the signs that would be evident just prior to a pivot point or a key reversal. One of the things that I have pointed out and we continue to notice is when we look at our average chart, that's this chart here, what you can see is the fact that we've really gone to this small body doji. This is that last week of trading activity on the Henkin, because realize when we convert to a candlestick, the last 3 weeks have had very narrow ranges in terms of where it opened on Monday and closed on Friday. But you can really see how small this body size has gotten on the weekly chart. There can be no doubt when we take a look at it that this really strong rally is at least coming to a consolidation point, if not some sort of a reversal. Now, let's assume that the market does reverse. If it does reverse, where would we look for potential areas to find support? Because it is my belief currently that we are in a major fifth wave count. What we have seen right in this area is simply our intermediate wave 1. We will get a corrective wave 2. And that, of course, will be followed by another impulse wave, which would be 3. That impulse wave could easily take us above these record tops at 1920. We would still have a fourth wave correction, and then our final kick, so to speak, to cap off this incredible run. And that would be the fifth wave, an intermediate fifth within a major fifth. You know, traders, we talked about this a little bit yesterday. I do want to take a look at this chart again. Short-term chart, 360 minutes. And really what it is illustrating in a very, very strong manner is the support and resistance levels that we're finding. The first one, of course, I believe that we're really in that critical area. That critical area is based on these two subtops right in here, as well as here. Of course, we have our primary tops at 1800 here, and now really our third top, a triple top over here. Now, once again, this is a very, very short-term chart. But here's what's interesting. Let's go ahead and really blow this chart up because I want to look at a couple of things, and here's what I am seeing. In terms of a short-term move in the marketplace, let's take a look at the fact that you've got this MACD just about to come up and cross. It's extremely oversold. And what we could really be witnessing is a nice cross to the upside and a move to the upside. However, that's a lagging indicator because when we look at our current activity, the last 360 minutes, you can see that it's come off of the high of the day, which was around 74, I believe, and is trading at 67, so closer to the lows of the day. I believe the low was around 62. So the key right now to me is how it reacts at this critical area. Because on a short-term basis, really what we're seeing, of course, is this absolute triple top. There could be no doubt about it. Let me go ahead and place our line there. There could be no doubt that we've got really strong resistance here. We haven't been able to take that out. And this, of course, is the third occurrence. We also, as you recall, had a triple bottom. So it doesn't really surprise me that much that within this range, we would have an elongated amount. In other words, a substantial amount of testings of the bottom as well as the top. It's not going to just be able to make it through there. That being said, we are at a point where, and I'll show you on the shorter term charts in a second, if we can hold above, say, 1760, I think we have a really strong opportunity to go and make another play and try to take out this 1800. At some point, obviously, they're going to be able to take that out. It's just when will that occur? So we have two basic scenarios. Let's assume, for example, that we do see some sort of a retracement, that the market does find itself under pressure. Where can we logically look for this market to go to? And to do that, we have put up a fib retracement. The fib retracement itself takes us the entire length of this last rally from the absolute bottom. I'm pegging it at 1530 all the way up to 1803. If in fact the market does pivot and reverse 1739, that is a critical point. If it can hold there, that would be great, but that would be rather shallow. A 38% would take us really right to 1700. And on a real wave 2 correction, considering the type of move that we saw here to the upside, a move back to 1700 actually would be quite healthy, because what that would allow us to do is as follows. First, we would absolutely have our first benchmark, because we really use wave 1 as our benchmark in terms of distance. Once we have that benchmark in place, it allows us to do all of our forward forecasting. So for example, a very, very simple form is just to take a look at this particular move, and then let's assume that the marketplace itself retraced, and in terms of the correction itself, the correction took us to say 1700. Now, with that in place, traders, what we can do is then say, well, wave 3 is going to at least be as big as wave 1. It should be 1.23 to 1.61 times higher than that. But traders, take a look at this. If in fact, and I'm just going ahead and compressing it, but if in fact this is a completion of our wave 1 right here, this is wave 2, wave 3 is going to take us to a new record or new contract high. And that to me is really, really exciting. However, prior to that, we've got to be able to break above 1800, which up till this point, we have been unable to do. We're taking a look at a very, very short-term chart. I typically don't look at 60-minute charts, hourly charts, but I felt that what I really want to be able to do is get a sense or a feel for, as this market either corrects and sells off or rallies, what type of trading activity are we seeing on an hourly basis? In other words, are we getting very, very large candle sizes like this that will quickly change and then reverse? Or is it more of a slow ascent and a slow descent? What you can see, for example, is you get these periods of real uncertainty where you've got the alternating candle color, but once it goes into its defined rally, the defined rally itself, it's got a lot of steam in it. In other words, it's got the ability to really push forward. The bulls are very, very much active in this marketplace, and when the market corrects, it seems as though you don't get that same type of strength in a bearish sentiment, for example here, well, as opposed to something like this where the market truly sells off very, very hard. You can see the kind of power the bears had right in this area. So my sense is right now, we need to hold this critical area. Where's that area? Well, it's roughly at 1760. It's these series of bottoms that I'm looking at. As long as we can maintain those particular levels, the next question is going to be, can we take a stab again at 1800? These are tops at about 1785. As I said, we'll have to see over the next few trading days, and we have a lot of fundamental data that's going to be hitting the markets over the next few days. And traders, lastly, let's take a look at silver this morning. And as you can see, just as in gold, well off of the highs that it was trading at. Of course, the 11 starts here. You can see that it takes a nice move above $34. Of course, that 35 was the brass ring, could not hold on to it. But here's what I'm looking at in terms of real support. You can see a pretty strong band here, 33.60. These are the series of lows in the marketplace. A little bit above that here. This one drastic low is a mistick or a misprint within the data service itself. But you can see that it has been able to hold pretty aggressively above 33.60. Of course, our stops are sitting at 33.20 and below. That accounts for this area here. And my sentiment is, as long as the market maintains above 33.60, we're still looking at a consolidating market that could possibly go higher before it actually corrects. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.